Hi everyone, this is Michael Bengiat with Lifetime Investor, and this is the Market Trend Advisory Weekend Review video for March 4th, 2023. So let's go ahead and just talk about what happened during this week. We had a sort of, I call it sort of the suspicious rally on Thursday and Friday, that did close out a pretty volatile week. During the week, we had Treasury yields pull back from the recent highs, and we had some economic data that helped investors look past the likelihood that the Fed's going to keep its restrictive policy in place for longer than anticipated. So the yield on the benchmark 10-year Treasury went below 4%, and that 4% level has been real crucial. Anytime the market's gotten above that, or yields have gotten above that, the market doesn't like it, and it's been sending stocks down. So we've kind of just closed right below that. And then we had the February PMI report came out on Friday that showed better than expected demand for services. New orders rose to the highest level in more than a year, and hiring increased. So the market looked at all this and said, well, it doesn't matter what's going on with interest rates or anything else, we're going to rally. And it did. And all the indexes closed higher for the week. And it turned out that the move was strong enough, technically, to bring the market back into a confirmed uptrend. So now you're seeing our green lights on the on the diagram here. Now we're not out of the woods. We have still quite a bit of red and yellow caution signals on our charts. There's still quite a bit of distribution or institutional selling days. We have 3 in the NASDAQ, 5 on the S&P. Any more than 5, you start racking up market count sell signals. And we're also close to getting what we call clusters, where you're getting a number more than 4 within a rolling 8-day period. And if you start getting those coming in, then you start racking up distribution pretty quickly. That could send the S&P would be the first to go down back to 0 pretty quickly. But the bulls seem to be controlling the market right now, so we'll see if that's going to happen. But I really call it suspicious because the last 2 days, I mean, there was really nothing that really was so bullish that the market should start rallying. Now, sometimes that's actually a good thing when the market is taking off and there's really no idea why it's doing it, and it's puzzling everyone. That's actually some of the strongest markets, but I don't know if that's going on in this market today. I don't think so. Also, the rally on Friday had a little bit of the feel of a short covering rally where you just keep going higher and higher just throughout the day, and you close in the highs. That's what happens when you get these short covering rallies, which are, real characteristic of bear markets, which I don't think we're out of yet. Now, you can argue, as the market bottomed? We don't know. It may have made a low, but we don't know if it's actually made a bottom yet. And this is why we're getting so much volatility. It's very difficult to know at this point what exactly is going on. Nobody knows. Before we get into that a little bit more, let's just go into the investing strategies. We did make a change here. For a long time, we had here on our 2X, we use leverage on our strategies, and we changed the ETF. So we're actually using QLD and SSO for our leverage strategies. We're trailing buy and hold a little bit just because the NASDAQ, the QQQ just went straight up while we were not fully invested per our system. So it's a little outperforming our unleveraged version, but not much. The SPYs, we're almost just flat. Well, the SPY is at 5% for buy and hold. We'll see. I mean, that's what happens. Don't expect that a strategy is always going to be outperforming. Every week, every month, you'll have variations. But overall, our investment strategies have done very, very well. Okay, so let's take a look at the indexes. So here we have the Dow. The Dow was outperforming for quite a while. You can actually see it here on the relative strength. This blue line is versus, that's the relative strength of the Dow, yes. And this is the S&P over here. So you can see we were starting to outperform quite a bit for a while, and then we kind of rolled off. So the Dow has sort of been a laggard. Now the Dow's only 30 stocks, so it's not something we really follow all that much. But it's again kind of showing you how money's been rotating in and out of this market for over a year, making trading difficult. So now this was actually looking very bullish here, just in the middle of February. We can see here we had we can look at it two ways. One, we have a really big cup with handle that formed here, or we had a kind of a more V-shaped cup with a handle that formed over here. V-shaped cups are a little not as strong. There's just no, when they just blast off the bottom, they're more prone to fail. But what happened here, and either way you're looking at it, and we got to this handle and then we fell off. And you can even see here, this is also another bullish thing. As you can see, almost like a mini cup with handle within the big cup with handle. So those are really bullish signs you want to see, especially for individual stocks. But in this case, it didn't really work. We kind of just leaked off here, made a new low, and then we come ripping back. So the Dow's looking a little weaker than the rest, but so we'll see what happens. But when we're still below the 50-day, that's the red line, and we never came down to the 200. Now this was the first index to blast through the 200-day moving average, which is the black line, and it's flattening out and hasn't really been able to really turn up yet. So let's take a look at the S&P. S&P, we're still technically in a downtrend. You know, the 200-day is flattening out. Again, hasn't really turned up yet, but we did get support 3 times at the 200, and then we really just kind of gapped up and kept going on Friday, and we ended up above the 50-day and the 21-day, which is the green line. So that was enough to put the uptrend back into play. Now, when we look at a monthly chart, you can see here we're one of the key things we need to get above here is this 21-month moving average, which is the pink line. And we've just been vacillating between the 40-month and the 21-month for quite a while. I think if we can clear this decisively, we'll probably, call that the bottom's in and we're, in a new bull market. But we haven't been able to get up there. We've just been back and forth. Now it's getting a lot of support at this 40 week. So if it does break that, 40 month, I'm sorry. If it does break that, probably we're going to go quite a bit lower. I'm still looking at this chart as we are not done. When you get these overvaluations, over exuberance, that it's not a good sign, and markets almost always correct, the whole previous move and more, which would take us back to, say, the top of the coronavirus crash, which was right around here. It would take us dropping even below that, which is what happens. So I'm still of the view is that this market really is not done. It's trying to discount a recession and stuff that it's probably going to happen. There's a lot of signs that we will go into recession if we're not already in one, but the market's kind of trying to resist that. Now we go to the NASDAQ. Same thing. We kind of just got above all the moving averages, but it's still the 200-day is still in a downtrend. Hasn't even flattened out yet. This is a little bit problematic. It's got a long way to go if we were to see new highs. So again, if we get above this 12,269, we'll probably have looked like this was the bottom, but I'm still suspicious of that. And then when we look at the monthly chart, we're not even above this one here. And this looks, both of these charts, the monthlies, they almost look like a ledge. And what a ledge is that you get that a lot of times in, say, a head and shoulders pattern, which we don't have here. But you come up and then you rally, and then you try to rally and you can't get above a key moving average. And it looks like it almost forms a little sloping line that goes up and looks like a ledge, and then you usually crack below it. And this one too, not as much, but it's starting to give you that sign of it can't get above this moving average. Usually it breaks to the downside. And then finally the Russell. The Russell, interesting, we're starting to see a lot more participation from small caps and mid caps, which is good because they've been really underperforming for a long time. It's been the mega caps and the large caps that have really been getting all the limelight for over a decade. So this will be interesting to see if this can get above this 2007 level to show that they're really taking precedent. Okay, so we go to the technicals. Despite the rally, we're still just about a little above 0.5%, 50%, 54% above of stocks above the 200-day moving average. New highs have been really just lagging new lows for the last week or so as this market's trying to bottom. And the number of growth stocks breaking out has been decreasing also. And also you can see here with the down volume has really been above the up on volume for a while. So we're not getting a lot of technical confirmation that this market is really blasting off. So another little warning sign there. And then on the sentiment side, I think we're still a little too bullish. Normally when you bottom, you want to see it just really go, quickly to, without any optimism. You got pessimism. We've seen panic in this, and we're not. We're extreme greed, and we've just kind of come down a little bit. So no sign really of this is bottoming out, and we've started to come up a little bit. Oh, you know what? This chart, for some reason, that didn't update. I'm sorry. I'm going to pause the video and update this. 1 second. Okay, sorry, I apologize. Both of these charts, I pasted them in there, but they disappeared. So anyways, I'm going to go back to the technicals. Here's the current one. Again, you can still see that the 52-week lows are outpacing 52-week highs. The number of growth stocks breaking out is even lower. And we're just not seeing a lot of strength. So I just wanted to give you the updated version of that. Here's the updated of the sentiment. We did get down to, we're getting out of the red in the VIX, which is a good sign. We've come down a little bit on sentiment, but we're still not, we prefer sentiment to be really much more pessimistic than it is. Now, this VIX, this has been a problematic issue for a long time, and I want to just kind of show you a couple charts here. This one I've shown a few times, is that whenever we've gotten down to between 18 and 16, that's been the top of the S&P. So you can see here, got down to 18.34, 16.34, and that was the top here in the S&P. That's this black line. Here we had the other one. It came down to 18.5 or so. That was the top. 19.12 was the top here. And here we got down to 1706, and we started to turn down. Now, we don't know if this is going to just go back up, but what we really want to see, let me show you in the next chart. Now, this is the NASDAQ versus the VIX. So whenever you get what we're trying to see, which will really give us the fact that we're in a strong bull market that is not just going to turn around and go back with all this uncertainty. We want to see the VIX get below where I've drawn this red line. And we're going to call this basically, 18 or 18 and a half, somewhere around the 18, 17 and a half. And we want it to stay below there because you can see whenever the volatility goes low for an extended period, and, the VIX can get down to, just 11, 12, sometimes even a little lower there. So that sweet spot, if you're between 12 and 16, that's when you get these really nice uptrends with low volatility. We saw this in 2013 and 2014, 2016 and 17. Again, really nice, easy money periods over here. And you can see where the volatility just came low and stayed low for a long time. Now you can see, just opposed to what's going on today, 2020, massive volatility, really just chopping up here. We're starting to come down. So we want to see it just break below this and stay below this for a line. And that will really help the market. But we haven't seen that in a long time. And that's why this has been red for just, month after month after month. We're starting to get a little orange here. It's a little improvement. So I think if we can get this to go down and stay down, in other words, overall volatility is dropping, we will be in much better position to see a really nice sustained bull market. So just want to give a couple things, final things here. Overall, I still have this dangerous make or break point in time. You can see it just going back to that monthly chart of the indexes. We're just floating between this area. The biggest problem is that the market is just lurching from one news item to the next. Every day, it's just trying to figure out, is interest rates going to come down? What's the Fed doing? Every utterance by anybody to do with the Fed is moving the markets every day, causing all this volatility. And that's just unfortunately going to continue until the market just basically decides that it doesn't really matter anymore. It's going in whatever direction it chooses. And the problem is that we're just getting, in recent weeks, we've seen just inflation data increasing. We're getting higher inflation. We saw that with the PCE, the Fed's preferred indicator. We're just getting, as I talked about last week too, it's signs of excess. You know, the meme stocks were back. SPACs are back. There's retail money's pouring back into the market. I've updated here. This is the 1-year Treasury. This is kind of one of the issues, is that interest rates are just not coming down. The 1-year just is making new highs. It actually broke out of a little consolidation here late last year and is making new highs. So, and then of course there's just everyone's saying we're in a recession, we're not in a recession, we're not going to recession. You know, look in the financial news or business news, and I mean, you'll just find 50 opinions, you know, and people that are big names, smart people, run, you know, multi-billion-dollar hedge funds, to the heads of brokerages, heads of Goldman Sachs and Merrill Lynch, and name it. Just there's more opinions. Nobody knows what's going on. So this is that, I say it's the dangerous make or break time. You know, we don't know if this is going to be another fake out, this big rally we're starting to have again, and a new uptrend starting. So you just have to be prepared that the market can go either way. So don't get locked into, you know, thinking the market's going to do this. I'm super bullish, off to the races, I'm going to make a fortune. It never really works out that way. So you have to keep an open mind and just, you know, we always listen to what the market is doing, and you have to respect the trend. You know, I would say I'm still very suspicious of this whole thing. I don't think the market is done going down, but I am open enough. I'm putting on positions if I can. And, you know, and the indexes are still pretty strong in terms of if you're getting into the QQQ or using our strategies. So you have to respect that. And then if it just all falls apart, well, then you're out. You go back out. So you just bend, like I mentioned this many times, you bend like a tree in the wind. And if you do that consistently over the years, you really can't help but do very well in the markets. So, well, that's it for this week. We'll be back next week, see what happens, if this rally will continue. Now, we do have finally just, we're going to have Fed Chief Powell come out. He's going to be talking again. Very likely it's going to be another market moving event. You know, he doesn't really want to see a rip roaring rally, because that is just basically it's increasing inflation. It's making people feel wealthy again. You know, they look at their brokerage statements and their 401s and go, oh, it was nothing. You know, off they go to spend more and more, which just pushes inflation higher. So, you know, he doesn't really want to see this, but he's doing his best to kind of talk the market down. But, you know, lately, in the last few weeks, it's just ignoring him. So we'll see. It's that battle's going on for a while. I don't know who's going to win it. So we'll see. Okay. And next week, we'll know a little bit more about, you know, who's going to win this one. Okay. Talk to you guys next weekend. All right. Bye.